The pair that I want to speak about today is Euro AUD, and the reason for which I want to speak about this pair is because finally we are exiting the range that we were having from a weekly perspective, and the pair is very near to providing two very good trading opportunities. So I want to speak about the pair, and obviously I will keep the analysis very educational so that you will learn some very important concepts when it comes to trading to develop a profitable strategy. As usual, what I will do is provide the full analysis from a technical perspective. We will then go and see what we have from an order flow perspective to see what hedge funds are doing in the market with the commitment of traders. And obviously, if you're able to understand what hedge funds, so the big players in the market, are doing, you are able to position yourselves with them, which is obviously an advantage over your competition in the market. So without further ado, let's start the analysis, and as usual, I will try to keep it as educational as possible. So starting from the monthly time frame, what do we see? Now on the monthly, we can see one very important thing, that all this area here is extremely strong demand for Euro AUD. Why it is extremely strong demand? Because before starting this huge impulse to the upside, the last time that the market went to the downside is exactly with this red candle here, meaning that inside of this area, there is massive demand for Euro AUD. And after the market had retraced from a monthly perspective inside of this zone and created this deceleration, we definitely did expect a rejection to the upside and the start of a retracement from all this impulse. And in general, if you have an impulse in the market and you want to measure the retracement, what you have to do is take your Fibonacci from the high to the low of the impulse, which in this case gives us a 0.382 retracement, which is exactly at this area here, which is definitely a level that the market might want to retrace to before starting the next move to the downside and finally breaking structure to the downside. So on the monthly, everything is very clear. We have a market that is rejecting strong monthly support. Going down on the weekly, what do we see? Now, from a weekly perspective, we can see that clearly the market has been trapped in this range here for quite some time. The lower end of the range was the support that we had at this area here. In fact, the market had respected this support here, again respected it here, again respected it here, and again respected it here. And the resistance that we had was around this area here. In fact, all across this area, we had this previous support. Actually, let's put a red. All across this area, we had this previous support, which was turned resistance here, again resistance here, again resistance here, and it was supposed to be turned resistance here. However, at the moment, the market is breaking above the range, which finally is what we were actually looking for in the first place. So we had the market that was clearly moving inside of this range for quite some time, and it was definitely time for a break to the upside of the range. And this was also quite expected. Why it was quite expected? Because the market had just created this W formation. And after a W formation, what you want to see is the market complete the pattern at the neckline, aka the previous resistance, which at that point is turned support before the continuation to the upside for the completion of this impulse, correction, and impulse pattern to the upside. So after the market had completed the W formation, we definitely did expect the continuation to the upside and possibly to break the structure. Now at the moment, we still don't have any kind of confirmation that the market will actually close above the range. In fact, the closing of this weekly candle is still in 4 days and 7 hours. However, it seems at least at the moment, that we will actually have a break and close above this resistance. Now, in general, what happens after a resistance level is broken to the upside? After resistance is broken, is turned support, meaning that if we will have a weekly close above this area, this resistance will be turned support here, from which we can expect a rejection to the upside for a continuation to the upside. So at the moment, the situation from the weekly is quite clear. The last thing that we can say is that we're also creating this candle here. Now, when you see a candle like this with a long wick and a green body, if we will see a close like this, then the next candle is supposed to fill in the wick, because the wick is simply a retracement on lower time frames. Going down on the daily, what do we see? Just a quick reminder, make sure you comment below and you let me know which pairs or topics you would like me to analyze or cover in the next videos. Now, first of all, from a daily perspective, we can clearly understand what kind of situation the market is currently creating. In fact, we had spoken about Euro AUD after the market had created this W formation testing the resistance of the range, and we definitely wanted to see from here the market create a move to the downside. In fact, I had performed a full breakdown of Euro AUD when the market was here, explaining all the reasons for which from here we wanted to see the market create this move to the downside. And then from here, I made another full breakdown explaining all the reasons for which from here we wanted to see this continuation to the upside. And I will link this previous analysis in the description so you can go and check it out for further reference and more free education. And that is exactly what the market did, following perfectly what we wanted to see. Then I made another breakdown just a couple of days ago after the market had created this overextended W formation. Because after an overextended W formation, what you want to see is the market create a retracement. Specifically, you would like to see the market retrace at least to the 0.382 of the Fibonacci taken on the impulse leg. And we can see that that is exactly what the market is currently doing. The market is about to hit our first downside target. And I will link also in the description the previous analysis in which when the market was here, I explained all the reasons for which from here we wanted to see the move to the downside that the market is currently doing. I will link also that one in the description. So you can go and check it out for further reference and more free education. But where is the next opportunity for Euro AUD? Now, as I said on the weekly, if we will see a weekly close above this area, all this previous resistance will be turned support here. And how we can take advantage of this situation. Now, before I show you that, let's first go and give a quick check at what we have from a COT perspective. So commitment of traders, which is what hedge funds are doing in the market. Now, from a Euro perspective, what we can see that with the last report, hedge funds have opened 2.5k shorts and closed 3,000 longs. So we definitely did expect the retracement to start because we have a weak Euro. And from an AUD perspective, what do we have? On the AUD, we can see 9.4k shorts opened on the AUD, only 2.4k longs open, bringing shorts at 60k and longs at 63k, with net positions decreasing from 16k all the way down to 3.8k. So what we can see in the long term is that on the AUD, hedge funds are shifting their positioning to a very positive AUD, more or less to a negative AUD. We're not sure if we will move again to the minus 40k net positions that we had here, but we're definitely having a shift to the negative side. And a weak AUD is exactly what we need for the continuation to the upside. So what we will have to be very careful of is to see that with the new report that will come out on Friday, hedge funds will actually open more longs and close some shorts. If that will happen, and keep in mind that that is what they have been doing in the long term. In fact, we went from minus 114k net positions all the way up to the current 168k, so a massive increase in the positive side. So if we will see with the new report, new longs added on the Euro and new shorts added on the AUD, it will be great for the continuation to the upside. But as usual, trading is reactive. Trading is not predictive. So what we will be doing with students during this move to the downside to retest this support is monitoring price action from a 4-hour perspective. Why? Because monthly, weekly, and daily combined with the COT data are the best time frames when it comes to the direction of the market. But the best time frame for confirmations and entry is the 4 hours. So during the retracement to test this support with students, we will be monitoring price action on the 4-hour time frame, waiting for the market to provide to us one of our valid entries. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a very good risk to reward and very good probabilities for the move to the upside and completion of this impulse, correction, and impulse pattern to the upside and creation of a higher high. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you. Also, make sure you go and check out the mentorship program. You find it linked in the description. You first learn all the rules of my rule-based strategies in the program, and then you trade them live with me. In fact, every single day you get a new daily market breakdown showing you exactly how to apply the strategies with entry, stops, take profits, as well as having me answering every single question that you have every day, including the weekends. So I really suggest you go and check it out. The link is in the description, and I will see you in.